The White House is making its move, and the world is bracing for impact. In a decision that will ripple across global markets, the U.S. has officially imposed sweeping tariffs on Canada, Mexico, and China, escalating what is already shaping up to be a full-fledged trade war. And within hours, retaliation has begun. China, Canada, and Mexico aren't backing down. Billions of dollars in tariffs are now in play, threatening American farmers, businesses, and consumers alike. What does this mean for you? Higher prices, economic uncertainty, and a showdown with global trading partners. Let's break it all down. CNN's Elena Trine is on the ground at the White House, tracking every development. Elena, take us through what's happening. That's right. The long-threatened tariffs are now a reality. The president had hinted at this move for weeks, but as of this morning, it's official. Here's the breakdown. A 25% tariff is now in place on all goods coming into the U.S. from Canada and Mexico, while tariffs on Chinese imports have surged from 10% to 20%. And the response? Immediate and severe. China has retaliated with 15% tariffs on key U.S. agricultural exports, chicken, wheat, corn, and cotton, while also imposing a 10% tariff on soybeans, pork, and beef. Canada isn't holding back either. Prime Minister Justin Trudeau has announced a staggering $30 billion in tariffs on U.S. goods, with an additional $125 billion in levies coming by March the 25th. Mexico has also signaled its own set of retaliatory measures, set to take effect this Sunday. What does all of this mean for American consumers? Prices are set to rise across the board. The U.S. relies heavily on these trading partners for essential goods: oil, food, electronics, and cars. With these tariffs in place, inflation is expected to accelerate, straining an already weary economy. Consumer confidence has already taken a hit, and Wall Street is reacting sharply. The Dow Jones dropped 650 points today alone, wiping out all gains made since President Trump took office. This is not just a trade dispute. It is a direct confrontation between the world's largest economies. The impact will not only be felt in the stock market, but in everyday transactions. Everything from grocery store prices to automobile costs will be affected. Businesses, both large and small, are now forced to reevaluate their supply chains. Some companies may pass these costs on to consumers, while others may consider moving operations out of the U.S. altogether to avoid the financial strain. The consequences of this trade war could reshape the global economy for years. Let's head to Beijing, where Mark Stewart is following China's reaction closely. Mark, what are we hearing from Beijing? Becky, the response from China is as strong as it is strategic. Beijing is making it clear that they will not be bullied. The tariffs are a direct strike at American farmers and agricultural workers, key supporters of the Trump administration. Soybeans, a critical export to China, have been hit with new tariffs, further squeezing U.S. farmers already reeling from past trade disputes. And it's not just tariffs. China's Ministry of Foreign Affairs has issued its harshest warning yet, vowing to fight the U.S. to the end if necessary. The message is clear. China will match Washington's every move, tit for tat. Beyond trade, China has hinted at other forms of retaliation. Some experts speculate that Beijing may limit rare earth mineral exports to the U.S., a crucial component in manufacturing technology, including smartphones, electric vehicles, and military equipment. If that happens, it could cripple entire industries, sending ripples throughout Silicon Valley and beyond. China could also slow down the approval process for U.S. businesses operating within its borders, making it more difficult for American companies to expand in the world's second-largest economy. Paula Newton is standing by in Ottawa with reaction from Canada. Paula, we expected China to retaliate, but Canada taking this hardline stance? Walk us through it. That's right, Becky. This is not China. This is Canada, the United States' closest ally, a country bound by a free trade agreement negotiated and signed by President Trump in 2020. And yet today, Prime Minister Trudeau called this an existential threat to Canada's economy. The response? A full-scale trade counteroffensive. Canada has slapped a 25% tariff on meat, vegetables, dairy, and alcohol. Everything from U.S. bourbon to beer will now cost more. And beyond tariffs, Canadian provinces are taking it a step further. Some are now refusing to sell U.S. alcohol altogether. The consequences are immediate. Border customs officials are scrambling to adjust pricing on shipments, and businesses on both sides of the border are reporting major disruptions. Retail CEOs from major U.S. companies like Best Buy and Target are already warning that these tariffs will lead to price hikes, not in weeks, but in days. In addition to direct tariffs, Canada is considering imposing new restrictions on U.S. exports, particularly in the energy sector. Canada supplies a significant portion of America's oil, gas, and hydropower. If Ottawa follows through on proposed levies or limits these exports, it could lead to fuel shortages and increased energy costs for millions of Americans. Meanwhile, businesses that rely on cross-border trade are already feeling the pressure. Automakers, tech companies, and agricultural firms have raised alarms over the potential long-term damage. The cost of production for many goods is set to rise, forcing companies to make tough decisions on pricing, layoffs, and potential relocation. And let's not forget the political consequences. As this trade war escalates, it could have major implications for the upcoming elections. With American farmers and blue-collar workers feeling the squeeze, will this impact voter sentiment? Will we see shifts in key battleground states that could decide the next presidency? So what's next? Canada is weighing drastic measures, including levying additional fees on U.S. energy imports, hydropower, natural gas, and oil. Some officials are even discussing restricting the supply of these resources altogether, a move that would send shockwaves through the energy sector. Bottom line, this trade war is no longer just a possibility, it's here, and it's escalating fast. The next moves by Washington, Beijing, and Ottawa could define the global economy for years to come. We'll be tracking every development, every response, and most importantly, how this will impact you. Stay with us for the latest.